It's an urgent alert. I'm your host, Steve Van Metre, and thanks for joining me today. In our lead story today, JPMorgan Chase urges all customers to take immediate action, and they're not the only major bank warning its customers this weekend to take action. We'll show you what these two big banks say you need to do right now. And this is our Sunday show, the show that makes you money, where we like to look at the technicals, momentum, and machine positioning to help you make more money as a trader or investor. And speaking of making more money, we'd like to welcome Critical Metals back as our sponsor for today's show. You can find them on the NASDAQ on the symbol CRML. And there's some big news because this Friday, the Russell 3000 is adding critical metals to its index. The stock is already sitting on the launch pad. And this is going to bring in a lot of buying. We're giving you the early heads up so you can take advantage. Again, on the NASDAQ on the symbol CRML. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now let's go to Bloomberg, where we pick one of two stories up as global investors turn cautious on what's favorite Japanese stocks, as Citibank says it's time to get out. Citigroup are among some firms that have turned more pessimistic toward the nation's equities as the outlook for corporate governance reform and the Bank of Japan's monetary policy remain uncertain. A fund manager surveyed by Bank of America showed about a third of respondents believe the market has peaked, and this is just a big warning that if you are holding Japanese equities, it may be time to sell. We'll make the case. We'll give you the charts and all the data in a bit. As foreign investors who helped push up Japanese shares to record high just a few months ago and beat overseas peers became net sellers now for the fourth straight week through June 14. That's the longest streak since September. And here you can see Japanese equities are facing a, quote, material risk of correction, suggesting if you own these, it's time to get out, as it's likely to take a while before positive factors emerge. That's something we see a huge positive factor for is critical metals. I said it was sitting on the launch pad. Look at this. Here you see this red line right across here. This is a 6-month volume profile. The stock closed Friday right in this supply zone. And what you're going to see this coming Friday is their inclusion to the Russell 3000. This is going to bring buying into the stock and send it, well, potentially to the moon. Again, check them out on the NASDAQ on the symbol CRML, as JPMorgan's flows and liquidity report is saying now the short interest on the S&P 500 and NASDAQ 100 ETFs, SPY and QQQ, have been making successive record lows, and this is dangerous, my friends. When people look at the market, you want to see short interest in this, because if there isn't and there's a massive sell, well, there's no one to keep it from plummeting. The declining short interest on SPY and QQQ to successive record lows have been providing a safety, steady flow of support to U.S. equities over the past year to help suppress volatility, thus acting as an implicit short vol trade. This poses a massive vulnerability to U.S. equities, a scenario where negative news start reversing the past year's decline in short interest. Of course, if we enter an all-out recession or even worse financial crisis, what you're going to see in the next chart is the biggest red flag for U.S. equities at a time when what we're seeing is people are rotating into the biggest of the big U.S. companies for safety. And here you can see short interest on the SPY and QQQ as a percentage of shares of outstanding is at record lows. This is very dangerous, and I want to know what you think. Are you rotating into the biggest companies for safety? Are you looking elsewhere in the market? Weigh in the comments below. We'd love to hear from you. But is it just a function of the indices? It's also, we're seeing this on the Magnificent Seven. Investors are not looking to be short. Everybody is long this market. We see that major investors, retail investors, machines, algorithms, everybody, even foreign investors, long U.S. stocks, putting this in a danger zone without a buffer to stop a downturn. And here's why. With SPY and QQQ representing major vehicles by investors for placing positions on U.S. equities at an index level, their declining short interest has provided a steady flow of support to U.S. equities as short positions were gradually covered. So what happens when markets dip, where they correct or drop, you see these short interests actually gain in value. The short sellers cover them, they sell those positions, and they turn around and buy back into the market, acting as a buffer. And what, of course, JPMorgan is warning about is there's absolutely no buffer to this market. And the risk right now is we are fully into into the corporate share buyback blackout window. Let's take a look at our screens here. Momentum remains positive. We have 34 consecutive daily buy signals on, of course, the S&P 500. This is from our own data. We take a look at multiple technical signals like the RSI. This is sitting near overbought territory. The moving average convergence divergence, which has a positive cross. We take it and a number of other signals and a proprietary one. We look at a daily count of momentum, a 1 month, 3 month, and 6 month. You see these things that say max. It means momentum on the market is stretched, likely looking to have a pullback. What you see, the downside target is a 50-day moving average. And we even mimic the machine positioning report with a fast algorithm and a slow one, saying the market is long, the machines are long. The difference is we run this on a historical basis. And here's the best part. You can get a 30-day free trial of our reports. You want to start making more money? I'll show you everything you need to know in today's show. Check out, of course, those links below. And while you're there, check out critical metals, which we think when they get out of the Russell T 3000 is going to take off. So here we can see the S&P 500 symbol SPY, the largest ETF, and this is what the market is concerned about. And JPMorgan's warning is the market's been on a tear and nothing is now stopping it. But if something were to come along, or worst case, the economy in a recession, there's nothing to keep it from plummeting, as there's no short sellers. And what we can see here is the 10-day volume profile is sitting just below current prices. If this starts to break down, and what is likely to happen with the largest buyer now out of the market, there was another factor that pushed the market up toward the end of last week, and that was some rebalancing of some major indices were going on there. It pushed the index up, and now without the largest buyer, well, we could see stocks continue to head down. Of course, the risk then is as well that we see QQQ head the same direction. We see the RSI. This thing is in overbought territory. MACD's got a positive cross. It's the same with Momentum Time Pro, saying 34 daily buy signals and nearly maxed out over a 1, 3, and 6 month window. And when you get to these extreme momentum signals, it tells you a reversal's coming at some point. Where it could go? Can it go? Can the markets go higher? Absolutely. Potential pullback to the 50-day moving average. Notably, our machine positioning based on a historical basis, which we do, suggests the market is long and looking potentially to reverse. Here you see QQQ sitting right underneath that 10-day volume profile as those big tech companies that are buying massive amount of shares go into blackout. Well, the biggest buyer of their stock is now gone. We see a potential pullback down here to the 50-day moving average as the first move. If we see some shock to the market, well, we could be all the way back to somewhere around, or perhaps maybe around our 1-year lows, which would be very interesting. Here you can see on momentum, it is at extreme levels. And again, the biggest buyer of the market is gone. Let's talk about the Russell 2000, and this is small caps. Momentum is negative. And remember, where small caps go, we made this case on a show a couple weeks ago, where small caps go, eventually the big caps follow. And this is key. If you want to know where the market is headed, watch the small caps. And here you can see 14 consecutive daily sell signals. We made money on this position. You remember that? We made money on the other two. And you know, we're out here. We got stopped out, which is absolutely okay. If you're looking for signals on stop losses, we give it to you in all of our reports. Every signal I review and give you my opinion on. Here you can see machine positioning backing off on the fast algorithm, backing off that 100% level on the slow algorithm. On a 1-month window, we're at a sell max. So what it's telling you is momentum's negative, machines are starting to move down, and let's take a look at the price chart of IWM, because it's setting up a larger move lower. Here you can see the 6-month volume profile, and you've noted when it breaks this, it tends to move down quickly, suggesting the 200-day moving average and maybe even below into the supply zone are the next targets for, of course, small caps. Let's zoom out here. That was the 1-year chart. As we zoom out here, what do you see? A potentially larger move down in small caps, as this is starting to look very toppish here. You have a peak, a higher one, and now you're starting to see the peaks coming in at lower and lower levels. Let's take a look here again at the 6-month chart. The first one was a 1-year. You know, price now below that 6-month mark, suggesting a bigger move down in small caps that will indeed likely be followed by those big caps. But we started out the show talking about Japan. Let's take a look at our screen to show you the value of what we bring. 6 consecutive daily sell signals. Our machine's now moving net short on the fast algorithm, the long side, the slower side following. You see the momentum, 6 daily negative counts. We picked this up early, giving you the heads up that you didn't need to wait for Citibank to tell you to get out. We told you well in advance. And look at this, Japanese securities symbol EWJ sitting right underneath that 6-month volume profile in a critical breakdown of where this is going. Time to get out of this as momentum is headed lower. But let's take a look further. We talked about something that we flagged to our clients, and I want you to see this for our subscribers. And this is back on the report that was coming off short positions. So I'm going to give you the details because we talked about this in the regular shows. We had a buy it open for our subscribers back on 6/12. It's up 2.37%. This is U.S. oil. 9 consecutive daily buy signals. We've got an upside target at almost 81, downside target at the 50-day moving average. We've got our stop losses, which we give to our clients and update them regularly for them. Let's take a look here. This was on June 12th, what we told our subscribers. Yesterday, my conviction was low, but now you can buy upside target, set your stops. We give you all of the data. And sure enough, let's take a look at U.S. oil here. And what's surprising is the major equities such as XLE are not following, but what we see is a move up here into the 80s, and this makes, again, a nice trade. You see the value we bring, and of course we think that, of course, our subscriber for today's show, critical metals, when they get added to the index, well, there's going to be a lot of upside potential. Let's take a look at the bond market. We keep hearing the machines are still short on the bond market here. Now, you know, we don't have any updates. None of the commercial banks have put out a whole lot of data this week. It's not unusual for a holiday week. We know on the equity side, they're max long. We know on the bond side, they're somewhere maybe short, maybe even neutral, and this is the opportunity. You talk about what's going to happen when central bankers start cutting rates. Well, bonds go up. Here you can see the relative strength index at 59. The MACD's got a positive cross. Momentum Timer Pro, 14 consecutive daily buy signals, and what we see is the 1-month window is maxed out. We see on our screens, because we run a historical overlay, the machines should be net long here. Now we're down on trade because we didn't use stop losses by 0.37%. Upside target unchanged, downside target unchanged. Let's take a look here at TLT. If you're looking to rotate out of equities, this may be a place for you, because look at this. It's sitting right on top of this 6-month volume profile, looking to take a move up here into the 100 mark. Our first target here is 96.31, and let's zoom in here. We can see over the last 10 days, the buyers are right below here. Every dip is being bought, and that is very important as we look to see this go even higher. We zoom out to the 90-day window, and you see buying support underneath here. And why does that happen? Well, it's very simple. The market often front runs the Federal Reserve and other central bankers by several months. They're starting to believe that September could be the first cut, and market participants getting in early. Of course, if you're a subscriber, you would have gotten in even much earlier. Last time we flagged this was on May 3rd, and that trade is indeed up. Let's talk about gold, something we also flagged to our subscribers, giving you some insight into our book of trades here. Momentum is negative only because we have one daily count on Momentum Timer Pro. MACD still got a negative cross. RSI is at 48, coming off somewhat near oversold territory, but we flagged a buy at open on 621. Based on solely our Momentum Timer Pro report that came off of the sell max window. This is something we show our subscribers. Right now, the trade's down 1.4%. Upside target 222. Downside target 211. We even give you stop loss levels. Check this out. Here, gold bulls are rejoicing. What looks like a double bottom on the 90-day chart. Here's your upside target. Here's your stop loss level. Again, we do all the work for you, so you don't have to, and you can find this all out in a 30-day trial. Be sure to check the links below, and while you're there, check out critical metals. Let's look at that 90-day chart, and what do you see here? There's a bottom, there's another bottom, there's another bottom. You zoom into the 30-day chart, and you can see it's making a series of higher lows. This pullback here, if it can get some momentum behind it, could send gold higher. It's sitting right at its 10-day volume profile. Buyers have been eager to get in on this. If that happens, well, we're looking at a run up here to perhaps this prior high at around 222 for the metal. And remember, where the metal goes, usually the miner follows, and we have a buy it open on our CTA report. Now, so you see one based on momentum, this one flagged based on machine positioning as it was coming out some short positions on the fast algorithm. It has not flipped momentum wise yet. Here you see the RSI also at 48. MACD's got a negative cross. We've got our stop loss levels, our upside target at 36 here. And check this out. You can see right from our reports. This is what you get when something signals, and then we follow up on the ones we tell you about. And here you see where the metal goes, the miners follow. Price just closed above his 10 and 90-day volume profiles. Set your upside target here. Here's your stop loss level. Let's take a look at where we see GDX going, because you look at this, it's sitting right above that 6-month volume profile. Buyers are coming right in here. You look at the 90-day chart, the buyers are right there. That's exactly what you want to see. 10-day window, buyers all underneath here. This is exactly what you're looking for to show some sort of support in the near term for the market. Why we flagged this, and you see our CTI Tyron Pro, why we told our subscribers we think there's your opportunity to get back up here into the $36 range, maybe even run up at the recent 6-month high. Let's talk about soybeans. This is a trade that's going to show up, and one of the reasons you need to be a subscriber, because when you see these max short windows, it tells you at some point this is going to reverse. We've got a 1-month signal on a sell max. This is the value that we bring you in the trading space in a big way. Let's take a look at soybeans here, and you see it's sitting right near this recent 6-month low. At some point this is going to reverse, but let's zoom out to the bigger picture here. If it does break down, that would be fine, because when it does reverse, you can see it make some big rapid moves, and we took advantage of this recent move up in here, and we're getting positioned to take advantage of the next one. You can be too. Again, links in the description below. You want to make more money trading, you want to make money trading, we help you out every step of the way. Let's talk about the dollar here, because it is bullish, but you notice we are still on our dollar bearish position. We've got a buy of UDN at open at 17.99. This is dollar bearish fund. We're only down a little over 0.5%, so it's not really a big deal. But look at the dollar. It's stretched momentum wise to the long side. The bullish fund is actually built 10 consecutive daily buy signals, and we're still holding on to this because if the Fed starts to waver or the economic data changes, well, that means the dollar is going to go down. That's how the market trades it. And let's take a look at UUP here. It has indeed gapped up a little bit off that trade. That was where we got stopped out for our subscribers, but it's continued to run up here. We're holding this UDN trade. As you can see, it's still got some legs. There could be an inverse head and shoulder patterns with a left shoulder, head, right shoulder forming here. Be interested to see if buyers step into this in a material way, because if they do, well, that suggests there could be a big move on the dollar short side. And again, this is why we give you all the tips and tools you need to make money. Speaking of making money, let's talk about our sponsor for today's show, Critical Metals, who's getting added to the Russell 3000 index this Friday. You can find them on the NASDAQ under symbol CRML, and they're securing minerals for Europe's switch to clean energy, and the government said this is where it's going, and Critical Metals is on the forefront of this. Here you can see from the Russell 3000, the newly reconstituted indices will take effect after market close on June 28th, 2024. That is this Friday. And here you can see from their list, there it is, Critical Metals, symbol CRML, is on the list to be added to the Russell 3000. You can get in on that. And here you can see Critical Metals announced it's completed the initial investment as part of its recently announced plans to acquire Tanbreez, one of the world's largest known rare earth assets. In exchange for 5.55% of Tanbreez, Critical Metals has provided initial investment of $5 million to Rimbal Party Limited. And who is Critical Metals? They're a leading mine development company focused on critical metals and minerals, producing strategic products essential to electrification and the next generation technologies for Europe and the Western world partners. Its flagship asset is Wolfberg Lithium Project in Vienna, Austria. Let's take a look at those charts now. We're looking at the 90-day chart, and this is what you want to see. Notably, sellers have been sitting right at the current level, looking to get out, and now all of a sudden a big indiscriminate buyer is going to show up starting on Friday, and you can see buyers have been underneath this, knowing that this was a good chance something was going to change. What's the upside target? Well, this thing could go anywhere, maybe even upwards back over above $18 a share. As we zoom into the 10-day chart, look at this setup. It's sitting right at its 10-day volume profile, Sellers have been here. Now they've got the announcement that Russell 3000 is going to be a buyer, and it's going to squeeze the last of those shorts out and potentially send the stock even higher. But as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.